What's up, guys? It's Rob here, and today we're going to be talking about PROG stock, Progenity, ticker symbol PROG, because this stock is pumping up big today. We're up about 15% on the day. However, their time left to pump may be numbered, all right? There are some huge deadlines coming up for them, as well as some massive catalysts, which we're going to break down. So let's take a look at the chart first of all. You can see it right here. You can see that PROG is up pretty big on the day, about 15% this accounts for, right? They finally broke back up above $3. They were really struggling with that on Friday. They broke back above $3, the 320 resistance, and now they're going to struggle with 350 for a bit, it seems. But PROG stock is approaching a massive deadline, okay? They are, unfortunately, they only have a couple of days left to meet this deadline to actually rise in price before they lose a ton of momentum and huge catalyst. So we're going to break down the catalyst, but basically there is a big battle going on between the longs and the shorts. The shorts are trying to drive PROG stock down by this date, and the longs are trying to get it just a bit higher. All right, so we're going to see what we can do with PROG stock, but there are a couple of catalysts that we need to talk about. The first was actually just announced today, okay? PROG at 6:30 just announced their participation in the Piper Sandler 33rd Annual Virtual Healthcare Conference. Now, this is essentially a pre-recorded fireside chat, and it will be available on the conference website or on PROG's investor relations page. However, the issue with this is that it will be available on November 22nd, which is not going to be happening in time for the Gamma Squeeze catalyst that we're going to be discussing in just a moment. All right, the Gamma Squeeze, the key date for that is November 19th. So by November 19th, we need PROG to be much more expensive, and this catalyst, the fireside chat, while it may have served to rise PROG stock a little bit today, while PROG may have risen because of it a little bit, today they are not going to be pumping on it, at least not on what the people are actually going to be saying at the conference until November 22nd. So we'll have to see what they actually say, if they have some good news for us. But regardless, this catalyst, unfortunately, is not going to happen in time to really get PROG stock moving by when it needs to be. Now, the reason that PROG stock needs to be moving by November 19th, in just a couple of days, this Friday, the reason that we need to be not just above 350, but ideally above $4 or beyond, is because of Gamma Squeeze momentum, all right? Gamma Squeeze is, which I will explain, is basically when people have to buy up shares of PROG if you've sold open interest call options. Now, institutions often sell these options. Here's the chart right here. Just for those of you who don't know what a Gamma Squeeze is, it's basically when you have, all these open interest call options, 29,000 at the 350 strike price, 32,000 at the $4 strike price, 24,000 at the 450 strike price, and it just goes on all the way to 750. You have tens of thousands of these open interest call options. It's when these start expiring in the money, when they actually expire on November 19th and they're in the money, institutions have to hand out shares of PROG stock in return for people who have bought these call options from them. And that means they likely have to buy shares of PROG, because it's unlikely that very many institutions have been buying up shares of PROG until this point, right? Especially given the fact that PROG is a very high short interest. So it's unlikely that institutions are just holding a ton of shares of PROG that they're ready to hand out to people. What's more likely is that they've sold these call options naked, and they will need to cover their PROG obligations when the time comes on November 19th or before, if it looks like PROG is going to be expiring above $3.50 or $4, whichever of these options are in the money, they'll have to start covering PROG shares for those, and basically raising the price of PROG by buying up a ton of shares to hand out to investors of these call options. So that's what we're hoping for with the Gamma Squeeze. And there really is potential, because there is massive open interest in many of those strike prices, like we just saw, 29,000 at 350, 32,000 at 4, 24,000 at 450. It goes on and on until you get 34,000 at 750. So it really could carry PROG quite a long ways. If a lot of these start getting in the money near expiration, institutions may end up having to cover on a lot of these call options, which would only raise the price even more and end up making more of those options in the money all the way up until 750 potentially. But what we're going to need to see initially is something that gets PROG moving in the meantime, right? It can't just it can't just rise for no reason. We need people to be buying initially to get some of these call options in the money in the first place. We already have 38,000 at $3. However, PROG has been over $3 for quite a long time. It's very likely that institutions have already covered some of their $3 call option obligations. It's not guaranteed, right? Obviously, as this date gets closer, we'll see what kind of volatility there is, and if institutions maybe want to start covering more then they might. But what we're going to need is either a whale to come in, we're going to need some Reddit apes or retail traders, we're going to need some big buying pressure for PROG stock, and it's very possible that PROG could be rising quite a bit because they have such a low market cap, only $450 million. It would not be tough for some whales or Reddit apes or retail traders, some big retail traders to come in and really raise the price of PROG stock. It would not be impossible. And they would basically just need to capitalize on this institutional pressure that they would be instigating, right? If they came in and bought up a ton of PROG shares, that would raise the price. Institutions would then face a lot of pressure to be buying up PROG shares as well. And it would just be this cascading effect that would continually raise PROG price. Now, this is risky, right? It's risky because obviously institutions have a vested interest in keeping PROG price down. They don't want to end up covering on not just these call options that they've sold, but also the short positions that they have, which we're going to talk about right now. So the final catalyst that we've got going for PROG stock, which is by far the most promising to actually get us moving up big, is a short squeeze, okay? And PROG likely needs to be around $5 before a meaningful short squeeze starts occurring. And the reason is, if you take a look at the short data on Ortex, you can see this yellow line right here is actually very important, right? This is a short interest line as a percentage of the free float. So when this line is rising, that's when shorts are really initiating their short positions on PROG stock. So if we take a look at what prices they were instigating a lot of their positions, it ends up being around $2. A lot of them were at $3. So PROG has been shorted, mostly at $2 to $3. Some were probably shorting around $1, but a lot of them have probably had to cover at this point. Obviously, there was an initial run up, but institutions have actually, you can see, ever since PROG got up to $4, has been, slowly covering their positions, right? So institutions are starting to cover a little bit. They have already been covering slowly but surely. And the reason we need it to get to 5 is because for a short squeeze to actually occur, you have to have a lot of pressure on shorts, and the shorts are not going to start feeling pressure until they're down on big money, okay? And they are not down on big money just yet, obviously, otherwise they would already be covering. So if they're not down on big money at 350, which is where PROG is at pretty much right now, and they weren't down on big money when PROG was at 4, if we take a look around the past 30 days, PROG was trading above $4 for a short period of time. Institutions were not covering then. I don't really count this when PROG was up to 650 because it was so brief during the pre-market that it ended up crashing down, and institutions may have feared that PROG was going to run up, but then ended up not covering, just for like an hour or two, and saw that it crashed. So it's unlikely that they could sustain themselves above 5, at least the initial shorts, the shorts that we're getting in when PROG was around $2, maybe even $3. Some of them might begin to cover if they really saw PROG running up. But also, past $6 is where it really gets juicy, where a lot of these shorts who came in around $3, and, maybe some came in around 4, but very few, mostly $3. When they're down 100% on their money when PROG is at $6, that's when they would likely want to start covering their PROG shares. Now, obviously, there are a couple of ways that we could get a short squeeze. We could get people just buying up a ton of PROG shares. However, a more likely scenario is if PROG gets gamma squeezed. That's what could cause a short squeeze, right? If institutions end up doing themselves in by buying up PROG shares that they have to pay out to investors in those call options, which we talked about earlier, the gamma squeeze potential that PROG has, which is ending on November 19th. At least it's becoming greatly diminished. The gamma squeeze is actually the best shot we have at getting short squeeze, at getting PROG to run up so much. Though it is a low market cap, it seems to have attracted relatively little attention from the apes and from big retail traders and whales. Unfortunately, though, a $450 million market cap, this thing should be relatively easy to move. It's under $1 billion. We wouldn't even need to get it to $1 billion market cap, I don't think, to start seeing short squeeze. It would probably be around 900 million that we'd really start to take off. But shorts know that a squeeze is possible and have been slowly covering their PROG positions, which once again, you can see right here on this short interest as a percentage of the free float graph. You can see that slowly, ever since PROG hit $4, shorts began to realize that there was real pump potential with this stock and slowly have been covering, decreasing their short interest. And today, they've barely increased it. Actually, when I was looking at this earlier, some had covered, right? We were down about 0.6% on the day. Now we're up 0.09%. But some shorts are starting to cover their positions, right? Probably the ones who were shorting it at much cheaper prices, around $2. Maybe some that were in at $3 and saw that they just became unprofitable today, that we couldn't get in, that we couldn't break below $3. Maybe some of those shorts are covering, but it is looking more and more promising that we might see a short squeeze. All right, there's huge potential for it, but we need the initial momentum to start us off. So the conclusion is that PROG needs to move quickly, right? The catalysts are slowly but surely disappearing, right? November 19th, which is when all of these call options expire. If we can't get high enough then a lot of these options are just going to expire worthless. A lot of retail money that ended up buying these call options is just going to be flushed down the toilet, handed to institutions. So we really want PROG stock moving up before November 19th. And if it does, that could really trigger a big movement in PROG price, a much bigger movement than what we have initially seen. And it could also potentially start off that short squeeze. All right, it's very possible with this market cap of 450 million that we could get some big money coming into this, and that the shorts covering, in addition to institutions covering those call options, could really move up PROG price. Now, that's best case scenario, right? Best case scenario, we're going to get all of those catalysts coming to us at once. It's not a guarantee. This is a very risky play. Obviously, institutions have a ton of money interested against this stock, right? They're shorting it. They're selling call options on it. They do not want this stock to go up. They're trying to keep it down. We'll see if they can, right? We're going to see by the end of the week if they've been able to hold it below $4, which is where a lot of those call options really start getting in the money. So we'll see. If we can get above $4 before the end of the week, things are looking pretty good for PROG stock. Currently, we're sitting at $3.47, so we're not that far off, and we're up 16% on the day, so things are looking relatively good. But I'm not trying to sell anyone on PROG stock. I'm not trying to tell you guys to invest in it. This video, it's just telling you guys my opinion on PROG and what I think could go on with it, as well as covering some of the research that I've done. So by no means is this financial advice. It's just my opinion. But other than that, guys, feel free to like the video if you enjoyed and subscribe to the channel as well. We do morning live streams every morning at 9 on weekdays, covering the stock market. We talk about PROG a lot. Other than that, though, have a great day. I'll see you in the next one. Bye.